Quess Corp, let's change gears and talk numbers and the corporate performance, quarterly numbers for the quarter gone by. Guruprasad Srinivasan, CEO of Quess Corp, joins us, and we've got Kamal CFO of Quess Group. Gentlemen, good morning to both of you. Thank you for joining us. Now, for the quarter gone by, revenue is up 17%, but there seems to be a stress on profitability and margins, and EBITDA is down. Is this a cyclical downturn, do you think, which has hit Quess Corp for the quarter gone by, largely because of what is happening in the IT space? Guru, sorry, you are on mute, I think.
Hi, Nikunj.
Hi, good morning.
It's always a pleasure speaking to you. In a sequence for last 2 years, we have been able to add 70,000 plus headcount year on year, and that's a kind of milestone, and sequentially we are able to deliver that. And our revenues have been up by 25% year on year, and our OCF has been upward of 70%, operating EBITDA to OCF conversion in terms of 71% year on year. So PAT, when it specifically comes to Q4, we have an exceptional item which is largely related to a sale of an asset that we did in Q3, which is also kind of the taxation on that is impacting in Q4, but it's a one-time impact which is coming into. Otherwise, the way to look at overall, we have invested cautiously. We have invested into product-led business, which is almost about 100 crore of investment that we did throughout the year in FY23, specifically for Found It, which is our job portal business which we are into. That business is really turning around well, and that investment is also kind of responsible for reduction in PAT for FY23 and FY24. We would have lesser burn coming in because our revenues are turning around exceptionally well in our product-led business. So, it's an investment phase that we had to go through.
But Kamal, the slowdown in IT is real, and the slowdown in IT is something which is a universal fact. And the fact that Indian staffing / hiring firms, they get a lion's share of their profits from IT is not new. How realistic is the concern, and how much do you think this slowdown in the IT services sector could impact Quess Corp in this financial year?
So it is having some amount of impact on our results, as it would be evident from the results. The IT staffing sits in the workforce management platform for us, and the open positions are definitely down to what the normal levels it used to be. So this business has had an impact on our results. But what we have done in this time is we have actually tried to right size our cost. We have worked on our IDC cost, and I'm happy to state that we've been able to bring down our IDC cost from 5.7% to 5.4% to compensate for the margin reduction which is coming due to the slowdown in the IT hiring space.
So, Guru, what is the out of jail card then? The slowdown in IT is real. I'll go by the commentary of large cap IT companies. They are not even keeping up to the campus offers. I look at startup hiring, it is almost at a multi-year high. I look at Google / Alphabet, Amazon, even SaaS companies, all of them are saying that we need to cut costs to manage our profits. All of them are laying off. If the backdrop is not hiring, it is layoffs, how will you come out of this? What is the out of jail card? I'm using this monopoly term. Been playing monopoly with my son, so I'm using that out of jail card term.
Sure. Let me give you a little background on what are IT sectors that we work with. Our exposure to services, IT services business is about 35%. If I roll back to FY23 Q1 and Q4, the way hiring happened in IT services sector was phenomenal, and that also impacted us in H2 because obviously that demand tapered down. Having said that, we also have good exposure, and we work with product companies, engineering companies, and auto companies is where our demand coming from currently. And if I were to be a little more comparative there, earlier the tech talent was hired by largely IT services companies, but we are also getting a lot of demand from non-tech companies like banks, back office management, BPM management companies. So where we are doing substantial hiring like AI, ML, RPAs, and a large process on SAP in itself. So, I mean, that's part of the product for us. So our demand would not be as expected. I mean, it's right that IT services definitely continues to contribute. We are eagerly waiting for them to get back into hiring. But our demand is down by 60% in a normal comparable way. But however, in that 60%, we are ensuring our fulfillment gets better. So we are progressing from a low margin to a high niche kind of fulfillment that we are currently doing and sustaining this phase. That's what is keeping our overall, bottom line healthy at the moment.
And to add to what Guru said, IT staffing in India, contributes 7% of our overall workforce management revenue. So that way, we are to that extent, rightly deleveraged because we have huge exposures to BFSI, which contributes such a 31% to the general staffing revenue, retail, which does 22%, telecom and industrial sector. So while there is, like Guru said, there is a bit of a slowdown in IT, but then there are other sectors who are doing well for us.
Discuss the other sectors. What is the outlook, Mr. Srinivasan, when it comes to growth in the integrated facility management and security services business?
Sure. So, I mean, there has been some good green shoots this year. So we have been able to clock almost about 24% of our revenue growth in OEM sector, which is our integrated asset maintenance. Followed by the food business alone has grown and recouped back to about 72% growth in a year, which means we had almost gone down and to extent, it is really picking up well. Little cyclic and seasonal business, but delivered extremely well for us in last financial year. Followed by security business has grown about 19% by revenue year on year. So we are definitely, it's not a great shout at the moment, but we are seeing green shoots coming up in that space.
There were also projections that you're aiming for a 20% EBITDA CAGR through enhanced sales capabilities, your technology, etc., and that'll help grow your EBITDA. Can you just walk us through what the outlook is in terms of your growth projections, Mr. Srinivasan?
Sure. So, see, even if you look at in the current, FY23, we have been able to deliver upward of about 20%. I mean, we are at a group level, we consolidated, we have delivered 25% of our revenue. And I still see a kind of, if I look at order book and the kind of ACVs that we are at pipeline, we are still confident to continue to, grow at a 20% year on year. That is something quite promising for the way outlook we are seeing.
Confident that this 25% growth rate will continue. Sorry, I missed that.
I said we have delivered a 25%. Yeah. Even in this tough condition, considering the kind of order book and pipeline that we have, we are still confident to grow 20% year on year.
Going to be organic, right? I'm assuming there is no inorganic element in it.
That's right. Absolutely.
Okay. Kamal, FY20, now IT is a cyclical business is what we've understood. I mean, we may call it as a linear need, but the business trends are cyclical. What happens if the demand starts coming back in the second half of this year or first half of next year? When will it start coming back in your balance sheet? Do you think a business like Quess Corp would be a beneficiary of early demand? Will it be a lead beneficiary or will it be a lag beneficiary in this case?
So we will be definitely a lead beneficiary because I think the kind of recruitment capabilities and the recruitment engine that we have built, like Guru said, we've done a 70,000 plus net ads year on year, which is, a very big number, but we have now delivered it, 2 years in a row. So we are confident in terms of our capabilities of hiring, and hence we definitely, and we are, in terms of staffing the leading in the country. So no doubt about this, that, we will be the lead beneficiaries as and when, this demand comes back.
Gentlemen, appreciate your time. Thanks very much for joining in, giving us the outlook on individual segments and growth projections and what the outlook is for Quess Corp. And stock currently under pressure, down about 5% at 376. Very short break.